Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 20th. Michael Boutros here with you this morning. Good morning, Jaya. Dagon says, hope you're feeling a lot better. Yeah, Dagon, it's going to be a slow process, but getting better every day. Welcome back, says Pete. Great to be back, Pete. Pooja, Peter, all three Peters in the house. Marco and Mark, Kamal, Jaya, Dagon. Great to see everyone here. Aurelian, great to see you as well. Marco. So, you know that Jamie and I were looking for a little bit of a dollar pullback to get in this trade, or a little bit of a dollar recovery to get in this trade on the short side. The dollar has just broken today. So you got a lower move breaking that 94.20 level that we were talking about for so long yesterday in the webinar. So implications for the DXY, we'll cover Kiwi dollar, dollar Swiss, and Euro yen. Ty is in the room. Hey, Ty, I put that in for you yesterday. Um, just a quick level up there on Euro yen, broke the upside. So you're looking for that major next resistance threshold just higher on that. Pound dollar and dollar yen. And then we'll take a quick look at Aussie, also making a run higher. An interesting setup on Aussie Key. You know, that setup we wrote about not too long ago. Well, everything's long ago now, but right here on the 29th. And it's the same exact levels. We're right back at those same key thresholds. So the implications for Aussie and Kiwi, putting an interesting focus on Aussie Kiwi. And that's everything I got on my end. If there are any questions or trade setups you guys would like to review, as always, at any time, throw them on the message board. So here's what we look like on the DXY. So again, this is the daily chart that we've been following. Watching this 100-day moving average, watching this slope. We were there yesterday. We were talking about how provocative that level was. And we were looking for a bit of recovery to get back on this break. Obviously, market had something different in mind. Here's the breakdown, pushing through 94.16, 94.20. This is the 618 extension from the decline. This is a basic 38.2, longer term of the decline from the highs in 2016. And then you have just this forward pivot in price. Boom, boom, acceleration, pivot, support. There's the breakdown. Next major level is 93.71, 93.65. Now that's just a basic 38.2 of the yearly range, but you're also looking at that swing low from July of this year. So looking lower in the DXY, the only thing that concerns me, and I always put this out there as a caveat, the trolls are out on Twitter and everyone's getting super excessively, excited about the dollar short. And remember, guys, we always want to go boldly against and cautiously with the crowd, right? The dollar short, we've been calling this here on SB for a while. While everyone's super bullish, now everyone and their mother seems to be starting to get super bearish. So just watch out from trying to chase. That's the point of my comment. It's very simple to it is in line with what we're looking, but there's going to be a lot of noise now with everyone's trying to get on board with just favoring, outright dollar shorts. It is a great trade, is what we'll be looking for, but watch these next downside targets, 93.65, 93.70. Could be a decent level for a pivot. Resistance, ideally back right at 94.27, same level. Ideally, if it comes up, it holds here. I'd say weekly open is sort of my line in the sand for the near-term bearish bias. So if we get, through 94.60, at that point, you could see recovery back towards 95, 94, 96, and I wouldn't want to be sitting in a position like that. Sorry about that. Okay, so that's my sort of near-term bearish inval. What would put us constructive would have to be break above 95 again. So levels are clean. Unfortunately, we didn't get the bounce we were looking for a re-entry, but it's an objective break, guys, of the weekly opening range. It's Thursday. You look for a Thursday, Friday low. Pete's saying lost to you. Guys, is there any issue with the audio or video on your front? If you could just give me a quick okay. Okay, back. AV's good. Okay, thanks, Pete. Thanks, Pooja, Peter, Ty. All right, thanks, guys. Pete, if you have any issues, just let me know again, okay? So that's the issue. And that's the game plan for DXY. That's the 240-minute. Here's what it looks like on the 120. It's a little bit closer of a time frame. Again, you had two tests of the weekly opening range high, two tests of the weekly opening range lows. That's objective stuff. You have to continue looking lower. Near-term resistance 94.27, bearish inval 94.60, downside 93.60, 93.70. Big level, but pretty clean, at least on the formation. Any questions on DXY? Hey man, great seeing in the room. Good morning to you as well. All right, let's jump into last night's update. DXY was number one. Let's jump with Kiwi. So this thing, you got some decent data out of New Zealand last night, which we noted in the report. Charged a nice rally. The big region, or the first level of resistance that we were looking for, 66.70. We're testing that essentially now. We're just a couple pips above. Newly added pitchfork I just threw on yesterday. Here's what it looked like again on the update. So on the daily chart, just to highlight what we're looking at, this red line here, or this red parallel, it's a nice parallel of this formation we've been following off the yearly high. Here's the daily chart. When I took a stretch of that and I took it off the high that we made back in July, it converged really nicely just on this pivot in price. So a decent target, nothing major. The big level was 67.15. That's why I said if we break through this, that's sort of a big region of resistance. A breach above that would certainly suggest that you have a much larger correction underway. Yeah, decent divergence into a low, into a Fibonacci level. The pitchfork or basic slope we've been following since last year, I'd easily discount that as sort of a false break to the downside. And if we break 67.15, you're essentially looking for a larger recovery in price. It suggests that this is a more important low. So any long exposure that you're in right now, 66.70 was the level to take something off. Next level, stop should be a break even or better. Next level is 67.15. Okay, it's a 618, a multi-year 618 from the 2015 low. But even aside from that, is just a basic, an objective pivot in price. Support, the break, acceleration, resistance, converges right there in the upper parallel. By the way, you're probably thinking to yourself, well, what merits does this have? This exact formation, high, low, high, caught this low in July. It caught the low in August. You can call that a raised ceiling or a lowered floor in median line analysis, where market turns ahead of a tag of the level. So it's the level to watch. That's the region of break to validate a larger recovery. Again, like I said, if you're holding longs, I still would be taking something off at 66.70. And stop should be at break even or better. If you're looking for re-entry in the trade, the ideal scenario was what I highlighted yesterday for us to get back into 66, 66.10 for a nice little tag of that 50 line for the move higher. It didn't quite get that low. Okay, it was a quick ripperoo. Obviously, the data helped. Okay, again, here on the daily chart, forgot to show you that as well, or on the weekly chart, excuse me. It looks like this. Okay, there's that 67.20 level. You can just see it. Support, break, test, boom, boom. Even on the weekly momentum signature, you can see very readily identifiable divergence, right? Price action to the lower low. Remember, we're only looking at the close. This makes it easier. Lower low. Oscillator makes a higher low. These subtle divergences typically are very nice. So the reversal play is upon us. The question is it a reversal play or is it a corrective play at this point? And what would confirm that is the 67.20 barrier breach. Okay, some pretty clean levels here on Kiwi. So for re-entry, what I was saying before, for re-entry on this, on the long side now, I don't think you'll get 66. If it does, there's probably a bigger problem that we would need to worry about. But something I was just looking at yesterday, former swing low, pivot break, you saw resistance and resistance, call that a tag if you want. That would converge on the median line later out basically into the start of next week. So, 66.20, 66.15, if you were to get some sort of mean pullback. Initial support, literally, if we get a pullback from here, like in the US session, I would expect to see that median line hold, the 50 line. So like somewhere in the range of 66.50 would be the first area I'd start to look to see some exhaustion. If we start to spike higher, a stop against that low to get through the median line. But long story short, it's not the area for us to start getting on the long side if you're not already long, okay? So no change to any of those levels from yesterday. We're still deep in overbought condition on the momentum signature, which you can see here. So again, the favor is still on the side of the bulls immediately for this thing to keep going higher. I just can't warrant any kind of long exposure here. There's just nowhere respectable to put your stop. Is it worth a short position? I wouldn't say I would be looking for a short position per se. If you want, let me say this: if you want to take a short scalp off these levels, the way you would even consider that is to be looking at near-term price action, but you can't be playing aggressive on the shorts, in my humble opinion. Again, this didn't have a very clean weekly opening range per se, so it's not like the condition with the DXY that we just looked at where we're looking for that stretch towards the low or extreme in the week. Here, it's just been kind of a slow grind for the last 2 weeks. So if momentum starts to duck back below overbought conditions, maybe an hourly duck back below if we get it, could be convincing for a stop against the high real tight. But even then, I'd only be looking to play it towards the median line, that 50 line parallel. So you're looking at a 25 pip stop or so, or 25 pip target or so. It's a tough one. It's a tough one for me to justify. And I get the idea. I'm 100%. I'm all about the fade position. I really don't care if there's position there and the safety, or not the safety, but the risk management is sound. Yeah, there's no problem with it. It's just right now you're kind of trying to hold the ball underwater. It's going to be tough. I'd rather still be looking for larger correction to get long. Okay, so that is Kiwi. Any questions on that? Oh, guys, there is a typo here. This is 67.15. I'm sorry about that. Right here. I hope you guys picked that up. I'll edit that after the webinar. Okay, Swissy looks like this. Another one where I was getting all excited because I thought we were going to get the recovery to get a short position. I told you guys yet last night, both of these are levels I would have loved to get a short at if this thing was going to rip. Specifically this one, because you have a parallel here of the same slope, which just ridiculous. Support, break, resistance, converges on a 38.2 retracement, just higher. You have the 200-day moving average and yearly open. Huge region. For me, guys, just coming back, a lot of this is kind of, I'm just trying to get into it again, and I'm really, I don't want to say teed off, but I'm kind of regretting the fact that I missed these. There were great entries last week. This was a level that we were talking about in my last update before the accident. Remember this whole 97.80 region, or excuse me, 97.50, 97.40 region. Once we broke back below that, a fade against that region every single time would have been the play. I was looking to take an opportunity there last night, but here's the breakdown. So look, I still don't think this is going to be a short position you just jump on from here. We've been talking about the divergence that this thing has been marking on the daily chart, lower low in price, lower low in price, higher low in the oscillator, higher low in the oscillator. So this could invalidate. He says we got the swing trade with Jamie on this. Yeah, I know, Marco. So we're always trying to cover it on both ends, but from the intraday, there was still a great opportunity there. Please get well and guard the long term. Yeah, Iman, thank you for that, Ty. Iman says, or Dagon says, what do we do here? Dagon, for which trade is that? Did I just miss that question? Let me know what trade you're specifically referring to on that question. But on this one, Yeah, so for this one, I don't want to encourage this behavior, and maybe it's just me, a little off tune still from getting back, but this still looks like a fade opportunity for me. Especially, look, let me take a step back, kind of explain myself. The indicators that I'm looking at have all been breaking to the extreme near term, but price has been unable to make the break of the lows. You saw the euro, right? Just as sort of the other side of the trade, clear an ultimate clear break of the objective weekly range. So I take a step back. Whenever I get, the market starts to move, and specifically if it's a move that we've been looking for months and starting to materialize, you're just looking for the quickest way to get in, right? But we have to stay objective and take a look back and look at as many objective factors as possible. You look at the euro, we just broke the weekly opening range highs. You look at the DXY, just broke the weekly opening range lows. Oz didn't really have a setup, although we'll come back to this one because it did have a nice breach, and we're hitting a big level here. But my point being is I can't just justify it from here. I still think the range lows are still in place, so that divergence in price action is a tell sometimes. So look, I'm looking to see what happens here. This is the level I noted to you guys as what would change my mind, would be sort of bullish inval altogether. And we are looking to get short. The idea was to get short from here or even 97.88 on a stretch. So I think if we head into the US trade session, Dagon, this holds. Euro is already spiking towards a target. Like I said, Aussie's already at resistance. We start to get a little bit of a dollar recovery from here. I was just scanning the Twitterverse, and you're seeing all these heads, dollar shorts in this, and there's a head and shoulder break, and it's a good time, okay, for this thing to kind of fizzle out a little bit. Ultimately, we're on the right track. So for me, I'll see what the US trade session looks like. If we spike and we hold, specifically if it's defense of the weekly opening range lows, that's your stop. If I can get a 20 pip stop on this, whatever, it's not a big deal. Let's see if we can play it for at least a near-term recovery back towards the low day close, because the low is still intact and the low day close is still 96.45. So that's what I'm looking for. The game plan, Digon, is still unchanged in that if we do get a larger recovery, I think the short side's to play. But I can't get short here. Like, what do you do? What do you do? So we have to be disciplined, right? And take what the market gives us. Here's Kiwi or Swissy rather, on the weekly charts also, right? That slope that we've been following since 2011. Boom, boom. We pivoted, broke below, tested it as resistance, pivoted, tested it as support. Watch the close. Watch the close. Not to mention, this is 1, 2, 3, 4, 5. So it'll be the 5th consecutive weekly close. Let's see how many times we've seen that, shall we? Oh, well, that's no fun. Okay, I counted this as an up candle. A little error in the script, that one. So 4 up weeks was right here. 4 down weeks was right here. Saw a near-term recovery. Privy to that was right here. You saw a 1-week recovery. A 1-week recovery. Okay, it counted this as down cancel. So this also would not be accurate, but it was one recovery. You get the picture, right? All of this is not a game plan. It is not necessarily a trade idea. It's just a reference, a frame of reference of what historically has happened on these type of declines. So look, I would need a decent rally to get short into the US trade session. Again, like I said, if we do defend those lows, the tell would be a break back above 96.46. You obviously don't want to wait for that to get in a long position if we do take it. But those are the first 2 like levels I'd be looking for. And if we do close today above 96.45, I think we can kind of dismiss this. If it breaks here, guys, the weekly opening range is invalidated, and objectively, aside from what Mike Boutros thinks or Jamie thinks or anyone, objectively, that puts you lower into the close of the week. Okay? So best trade ideas are typically the ones where your invalidation levels are right there. So I hope that helps. Dagon says, thanks, Mike. You're more than welcome, sir. we will see what to do on this one. Number 3. Number 4, Ty, this one was for you. You got my idea all around euro yen. And for this one, I was looking for a pullback. Again, I wanted to see 129.83 was a stretch. That would have been a little bit of a stretch entry. The weekly open is sort of the first area I would have wanted to see for a tag, just to get a stop even against 129.80. Didn't get it. Here's the breach. Now, the big level for this one is 132.58. It's the 618 retracement of the entire 2018 yearly range. Here's the daily chart. Okay, so you're taking the key 618 of the yearly range and slope resistance. And this pitchfork has actually been pretty decent. I'm not sure, Ty, if we added this in the webinar, if I figured it last night, but it's been pretty clean, right? There's the first initial 50 line breakthrough, support, 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 median line break, top 50 line break holds, support, resistance, resistance. So you had some divergence here on this rally. Price action, higher high, higher high, higher high. The oscillator, series of lower highs. And to me, this was sort of screaming for a break back below 130 to get that tag of the median line, if not 129.80 for the long entries. So here we are with the breach. Bottom line, 132.58 is the next big level. Now you do have the swing high from earlier this year. I wouldn't even say earlier this year, excuse me, from the July high. And that was 131.98. So sure, could get a little bit of a kickback here, but this is sort of the bigger level of importance in my humble opinion. And it'll converge on top side slope. So not a bad run here for euro yen. And not surprising with the euro rally that we're just seeing. Now, if this is just sort of an exhaustion pull or break higher, and these trades recover below the key levels that we've been watching, namely 131.55 in euro yen, dollar Swiss, if you were to break back above, again, like I said, 96.45, those would be screaming exhaustion moves, That's when you start to look for the possibility of a near-term fade position. But I digress. Any questions on euro yen? Ty, I hope that helps. Let me know if you have any specific questions on this one. Near-term intraday levels still look pretty darn clean. Iman says, thank you, Michael, for yesterday, highlighting the euro dollar level as I closed my short position at 116.58 and saved my money. Cheers, Iman. My pleasure. All right. Sterling. So this one actually did play out pretty well to our expectations from earlier in the week. If you guys remember the first update back, so again, euro yen levels unchanged, right, guys? We simply pulled back into here. It did hold 130.79, break above 131.55. You're basically looking for this. So the previous update, we were talking about sterling, and the game plan here, similar. The daily chart was showing confluence resistance at 31.66, a basic 100% extension. So if this whole thing was a fake out, and me and Jamie were completely wrong, right? Then this would be the level to hold, right? We are looking for the break. We are looking for a pullback here to get back on the long side. So the intraday chart highlighted 131.17 as initial support. Again, that's the August open. Remember, guys, I typically don't sit there and watch every monthly open for months later. But seeing as how that level was just tested into the close of the month and it held, or into the open this month rather, it's a decent pivot, right? And you had that former downslope converging right there. So price broke this really sharp slope. It came right into that region. That would have been the ideal entry. It was a hold. Here's the breach and continuation higher. So we've taken out 132.13, taken out 133. This is a region to watch now for sterling. Here's what it looks like on the daily chart. Okay, decent pivot in price. December lows of 2017. You see clear pivot here, swing low pivot, break, resistance, resistance. It converges On downslope resistance, this is the 38.2 line of that pitchfork. The reason I use the 38.2 line is because right down here, it was insane resistance, 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 break. There's a 38.2 on the other side of that trade, right? So some symmetry there, if you will. Add to that the 2017 slope support. Boom, boom. Tested it again. Classic Sterling move. The false break, recovery, but then we did break, tested as resistance, and moved off. This is, remember, the zoom and retest. We like to call it on the breakdown test of former support as resistance. So here's the recovery, a false break below descending support, break above the median line. This would be the first region I'd start to look. Okay, and also on that update, guys, that was the last target I noted to you guys, 132.90 into 133. That's the level we're at right now, or we're pips away, 32.80. So watch this region. Don't want to say get into a short off that, but certainly on the near-term approach, that's the risk for some sort of pullback. Ultimately, guys, I'm going to keep saying it. I think this was a very important low. It's funny because one of the first things, this is a stupid story. One of the first things I remember when I was getting out of, when I was coming out of, when I was coming back to consciousness is when I was talking to Jamie, who's in the hospital, and one of the first market questions that came up days after was, "Is Sterling trading high?" And he was like, "Yeah, it is." So I think we do move higher from here. I just think, again, this is a level we need to respect. If it's going to be some sort of pullback, this is where you'd expect to see it. Momentum is testing 70 overbought threshold. And maybe the pullback would give us opportunity to get back in. Ideal scenario, you'd find back resistance, former resistance, now support for an entry. But from here, topside breach, this is the daily chart. I'll show you the intraday in a moment. Topside breach, I'd be looking for this high, near-term target at 33.60. Okay, the big, huge region, obviously, goes without saying, is up here. Yearly open, 2017 high day close, just higher. You had the 200-week day moving average. This is a lot longer forward looking, but the immediate focus right now is on this 33 barrier. So here's the intraday. 32.13, that was those former swing highs. And I'd want to say keep your bullish inval for the near-term bias at 31.66 at this point. And let me add this target here for you as well. There you go. And bear with me one sec, guys. Let me just see what this looks like. Okay. Look, it might be worth it to rework this slope in a little bit. For now, I'm pretty comfortable sticking with what we've had. Drop this, work with this. It would further highlight bullish inval 31.66. So that actually makes us feel a little bit better. But even on the intraday spike, watch that slope. Now, if you take it and match it to these two highs, actually it's a perfect touch almost of these two. And that would put it basically just pips higher, but just don't get faked out. This is Sterling. It's the mother of pairs, of the throw over, the false break before the retrace. So don't get faked out. We talked about 32.90, 33 as resistance. Still just sit there. But even if it does go higher intraday, watch that region. It's basically 33.20, 33.25. It's a great trade. It's a great trade. It's just that if you're not already long, it's not the time to jump in. If you are long, Definitely 33. It still would have a portion of the trade-off, stops at break even. Um, I wouldn't know. I wouldn't necessarily tell you to drop your limits here, but um, 3360 and that definitely at 35 region. This is big areas of resistance on the way up. Watch for near-term pullback off this. Again, also an objective break, right? So aside from what anyone thinks, here's your weekly opening range high. This could be interpreted as test of the weekly opening range low, although we didn't even make it quite towards the weekly open. But flatlining above this 31 or below this 3166, still that would give us a near-term bias towards the end of the week. Impulse wave across the board. Is there any news? Huge breakout in interest rates. So, the headlines have been kind of mixed. I was scrolling through as I usually do on the mornings to see what's been going on. The headlines are stupid today. They're talking about easing tensions with the trade war being the justification for stocks moving higher and the dollar moving lower. I the guys on the fundamental desks and these fundy analysts, they can put a story on anything. But no, fundamentally, from an economical standpoint, no. It's just that maybe the markets are interpreting that trade negotiations are working better. I don't know. Let's do this. I want to see what interest rate expectations look like. So we got the FOMC on tap this month. That's already priced in. Wow, December's at 80% now. And remember, after December, guys, starting January is where we start to get monthly pressers with Chairman Jerome Powell. Remember, up till now, this increase in transparency that Bernanke is trying to put in all this stuff made the quarterly projections and the quarterly releases of the interest rate decisions. That's when we got the presser, where the chairman takes questions and gives a little bit more of a clear assessment of what the discussion is. Now, starting next month, as they announced, Jerome Powell will be having monthly pressers, and basically what the markets are interpreting that as that every session or every meeting is live, which they've always postulated to us, but at the end of the day, they've always only raised interest rates on the quarterly meetings so they can fully discern to markets the decision-making process and why they're doing that. Now that every month is going to be a live press conference, it opens up much more flexibility for the Fed to be able to effectively time monetary tightening with more ease. So the only reason I was bringing this up is because the December one is the one that we've been watching. This has been sort of somewhere in the range of 60, 70%, but this is up now into 80%. So it's not even an interest rate move, because if this was something the market was repricing as a factor, that would have been supportive for the dollar, which is obviously not happening. So I try not to assign a necessary fundamental shift for the opinion in the market change. I'm just watching price action. Okay, good discussion. Any questions on sterling? Number 6 is dollar yen. Here's what dollar yen looks like. So that's the only one that actually has been the cleanest since we started covering it. So dollar yen earlier in the week, we were talking about this region of resistance between 112.45 and 112.65. Decent area for dollar yen to start finding a little bit of a pullback. Nice confluence region of the 100% extension from the ascent off the August lows, 786 retracement from the decline off the July highs, and then obviously the yearly open at 112.65. So good region to look for some divergence. Well, it materialized. It's been a slow grind, but it's been just sliding lower. So here's the tag. We talked about it yesterday in the webinar. If there was going to be any position on this, it would have been just a straight position against, ideally 112.65, but once it started moving lower, you drop it against that high. And, it's 40 pips or so lower almost, but you had to be patient with it. So look, I still think we don't want to get too aggressive on this, but another one where you're now into Thursday range trade with the market still sitting within the Monday, Tuesday opening range. So as such, treat it as such. Play inside the range until we get the breakout. My gunshot approach would be that this thing pushes right up into 112.65, 112.45 again. And if this is going to fail here on the broader ascent, then that would be the trade to fade. This just looks too easy for the market to have registered a high. So just keep that in mind. Not only that, weekly open support is basically exactly where we just rebounded. Okay, just pips ahead. So the weekly open comes in at 112.03. The low that we made, 112.04. Okay. So not when I'd want to get aggressive. The levels are unchanged though. The levels are unchanged. So maybe if we get the drop into 112 in US trade session, if you're holding in that position from Tuesday, just take a portion off, stops at break even. Next level is 111.88. Remember, that's the August open, that 618 level. But still working the assumption that we could make one more test of this region. And with the same respect, that's the big level that we were talking about. If we get the breakout above that, 113.27 is the next big shot. For me, it's about just playing the pullback from here. Questions on the abomination? Okay, moving on. Sorry, guys, just looking at the some comments from Merkel. Says work still needed on the UK future trade relationship. Says there can't be a compromise on single market. Says atmosphere was good at the summit. Strong prospects of successfully defending claim. Oh, that's something different. Sorry about that. Okay, just some comments from Angela Merkel there. So I'm just gonna let you know if anything else crosses the wires here. Okay, the other two I wanted to cover real quick was Aussie and Aussie Kiwi. I had a computer problem and was late. Sorry, where would you buy the pullback in the euro to get long? Ty, on the euro to get long. So let's talk about the euro because I didn't put that on the list today. So here's number 7. Here's euro dollar. All right, look, Ty. So Jamie had the entry, if I remember correctly, at 116, I think. That was the play that we would have liked to see ahead of this break. Now that we've broken higher, look, my problem with it is this. I'm just gonna be completely straight with you. Literally, this is what I was looking at. So 117.80, 117.50, this 30 pip region is something that we've been watching for a while. Okay, it's the high day close from back here in July. It's a 38.2 retracement of the yearly range. And you just see clear pivot in price. I mean, I don't even need to have those lateral Fibonacci levels in there just to see how many times this level has caught lows and swings in price. So for me, this is where you want to be closing out your longs, right? Still no breakout. Exactly. Ty, you're taking the words out of my mouth. I think you're picking up what I'm trying to put down. It's not the breakout's not there yet, in my humble opinion. Again, it is a clear break of the monthly opening range. If this is the monthly range here, we pull back, we test it again, test it thrice. Here's the fourth push and break. Cool, but I still need to see a rally surpassing 1780. So my concern, and even slope, this 4-point support trigger, which was a nice break here, right before the drop into the yearly low, very effective trigger. We came into it here, held resistance. We saw the pullback for a day, then the pop through. So you're going to discount that as that sort of crest there into resistance. But here we are again. I would get, it's sort of like the dollar Swiss position. I'd get concerned that actually this is where markets start to fizzle out. Not for a reversal or anything major, but I think that's what would get us the better long positioning. So look, At this point, 1690, 1685 would sort of be a nice area to start to look for some support. It's this longer term slope line for this formation we've been following for a while. But more importantly, look at this. 1690 was the August open. Basic slope support off these lows, even if we, clean this up, still puts it right there. 1690. This retracement's null and void. Don't need this, don't need this. Don't need this. One touch, two touch, three. Tested as resistance. Pivot on both sides. There's that magenta line. There's the breakout. All right, so I'm gonna readjust this level. Yeah, I think so. Ty says more of a fade level. I think it is. Um, Ultimately, I think we're 100% right on the pullback getting opportunity to get long for the broader recovery. Because you guys remember, again, this all goes in line with the expectation that we had that dollar made a major high, euro made a major low, at least for the next couple of months. So the pullback would ultimately offer better opportunities to get long. But from here, on a near-term approach, our take, yeah, I'm looking for an exhaustion play up here. Okay, drop this high day close for July. Well, I wouldn't want to say drop it. 1750, I mean, it's too close of a barrier. If we're going to pull back, that's the first area. This is sort of where ideally you find support, in my opinion, or would be a nice area to get to see if we stall out here, this starts to fail. Again, that just the magenta line, clean pivot and price would be where I want this thing to sort of fizzle out before we start to move higher again. So both of these levels I'd be looking at, to be quite honest with you. But even then, on both of these entries, Ty, the target's still 1780, 1790. Okay, until we break, that's still the level. That's the level. Make sense? Let the picture clear. Well, yeah, for euro, which is why, Ty, I haven't put an update on the euro since I got back yet. I just look for what's cleanest. And for me, the way this even was starting out the week wasn't anything, at least in my eyes, that was super interesting. So yeah, that's in my opinion, that would be the best way to play on the long side. Ty is saying the only buy is the lower level with a tight stop of 116.90. Yeah, that's sort of the best. That's your ideal play. They always don't get the ideal move, but that would be the ideal play in my opinion. So watch both of these. Clear break from here. The levels are pretty nice as well. 118.50, and then I'd have to rework to see if there's anything ahead of 120, but this parallel would be 118.70s. There's not much in between this region. But an interesting level on the euro, and in combination with what we were looking at again, Ty, right, with euro yen, right? This thing, big level up here. So you still could get that last final thrust higher. Same thing with euro to get you into 117.80, 117.90, put euro yen up into that 132.58 with that upper parallel level. I think those would be much more convincing and much more conviction fade opportunities against the current uptrend. But at this point, it's just everyone's getting super one-sided. So I would look to see for an exhaustion trade is what I'm looking for. Questions on euro. All right, so as I was saying earlier, Aussie is the one that I was kind of stoking out this morning. Look, 72.88, I know we brought this level up yesterday here in the webinar. It's the 100% extension from the ascent off the low. So it's the first level you'd start to look for some support. It also converges on basic slope. Basic, right? It's only a 2-point touch, so you can't really confirm that. But even on the upslope that we added yesterday, boom, boom, boom. So you have a three-way confluence, downtrend resistance, uptrend channel resistance, and the 100% extension. Look for exhaustion. This would be, again, a near-term pullback play. It wouldn't be anything assertive. Okay, you're starting to see, at least on the hourly momentum chart, there is some divergence taking place here. Price action with a higher high, subtle. The oscillator with a lower high. So if we're going to fade, there's a couple of opportunities to fade, I think, if we're looking to take a little bit of a play on the dollar, getting a recovery here. Ultimately, guys, it's really important to understand that all of those positions that we're discussing would be very short-term in nature, would be fade opportunities in just the meaning of the word fade. We're just trying to make a little play against the broader trend. Ultimately, those pullbacks should offer better reentries because a lot of these trades have come off of key levels that we've been looking for months now. Levels unchanged on Aussie near-term support. You still look at the former low day close from August, so I'm still 72.38. Topside breach, you guys all know the level, right? Hasn't changed in, what, 5 months? 73.28, 73.36. Still the level to beat, in my opinion, for us to change our opinion on what's going on here with the Aussie. Here's Aussie, by the way, on the daily chart. Okay, and this high that we're at right now is just a simple 100% extension. So low, high, low, 100. Okay, so we're going to get a kickback. This might be the spot. Ultimately, this is a clear and objective break of the monthly opening range. That happened with yesterday's close. So ultimately, like I said, the pullback should be purchased while above 72. The big level player, again, it's got to be 73.27, 73.36. That's what we got to beat. You're more than welcome, Ty. Appreciate that, sir. Okay, so with that, we talked about Aussie. Aussie Kiwi was the last one I wanted to look at. And this was interesting to me because I was looking at it, and I literally, guys, haven't changed anything on this chart since since before the accident. It's just, here's your monthly open. You're still within the monthly opening range, but this support structure, you guys remember the first time we were looking at this into the approach? Last month, we were talking about the fact that you had the 100-day moving average, okay? Basic channel support converging on each other. It was the first bounce into this open of this month. Here again, looks like we tested it back on the 10th yet again. Once more, this is on the 18th, right? So I can't copy the right thing for the life of me today. Here we go. So right here, you'd start to look again towards that slope. 109 barrier is basically what you're looking at to be a fifth tag, right, of that same gradient. So something definitely pay attention to. And the break of this key range, which is what the range we've been in since August, should help us get an indication also, should be a tell for what's going on with the respective Aussie and Kiwi trades, and which one of those we'd want to be more aggressive on. So I'll be watching this one with great intent, great interest. Here's what it looks like on the intraday chart. Again, there's literally been no update to this since I left. There was the 100% extension that we were looking for on the decline. Boom. We're looking for a clear and definitive break of the lower parallel or 109.96 yearly open, huge pivot in price. That's what turned us bearish last month, and that's what would be needed to shift the focus back to the upside. So honestly, I really don't have a very strong opinion on this longer term. I'm not really a longer term Aussie Kiwi kind of guy, but I think it's a decent play once we get the clearing of that range. All right. Any questions? A gun to my head, you'd still want to fade this, I think, on a drop lower within this range, just because we are within that range. But it's all about a break of that 109, 100 pip region, 109.96 into the 109 handle. And that is 8 and 9. Any other questions, guys? Feel free to throw them on the message board. If not, we'll go ahead and wrap it up there. Thanks for being so understanding, guys. I'm just getting back in the swing of things, so we'll kick back. I don't know if I'll be doing a public webinar on Monday, so I'll keep you updated on Twitter, but I'm definitely going to be back on SB here Tuesday of next week. So if not Monday, keep your eyes on the Twitter handle. I'll let you know. If not Monday on Daily Effects, definitely back on SB here on Tuesday. Look, it's been very, very clear what the ranges are on the weekly basis that we need to be paying attention to. And if the weekly opening ranges have broken, tread against them with caution. Okay, so anything you're going to take, if you're going to try to fade a move, whether it's the dollar yen, whether it's the euro, whether it's sterling, just keep in mind those opening ranges for the weeks that have given out. So we don't want to get too aggressive on it. Thank you, Marco, Peter. I appreciate that. Cheers, Dagon, Ty. Always a pleasure, folks. I will see you on Tuesday or maybe Monday. I'll let you know. But have a great weekend. All right. Cheers.